We had earnings after the bell tonight from chipmaker Qualcomm, but the news was not good. That tech giant took in $1.26 a share in the fourth quarter after adjustments, but it missed Wall Street estimates by a nickel a share. Revenues also missed estimates, even though shipments of chips rose by 24% year over year. That was still shy of forecasts. Shares were initially lower in after-hours trading, but a missed earnings forecast is not the only challenge facing Qualcomm right now. It's having big troubles doing business in China. Josh Lipton has more.
For Qualcomm, China offers great potential and also significant risks. The company stands to make a lot of money because of growing demand in China for smartphones that rely on its technology. But Qualcomm also has said that China presents significant challenges. So what exactly is going on? For one, Chinese handset makers that rely on Qualcomm technology sign a license agreement and pay royalties. Analysts at FBR estimate that if a Chinese company sells a $200 smartphone using Qualcomm technology, then it could be on the hook to pay Qualcomm about $8 per phone. Here's the problem. Qualcomm says unnamed Chinese companies are either not paying the royalties or underreporting the number of phones they're selling. That's potentially a big problem for Qualcomm. Its licensing business as a whole represents about 30% of overall revenue.
It's a problem. We're still trying to quantify it, but it's a substantial problem for these guys. We think it's probably affecting revenues as much as, call it, $500 million. So it is a sizable amount.
Separately, Qualcomm also disclosed that the Chinese government is investigating the company under the country's anti-monopoly law. Analysts at RBC say it could be another 12 months before there's a resolution to that dispute. Qualcomm isn't alone in facing challenges in China. The Chinese state media has said that Beijing should punish what it calls the pawns of the U.S. government, pointing to Cisco, Microsoft, and Google.
It's very clear that the Chinese government really wants to do things internally, and anything with a decent margin coming from abroad is going to be scrutinized.
Despite these headwinds in China, Qualcomm bulls point to the company's chip business, which they say is enjoying strong momentum. Its chips are used, for example, in Apple's new iPhone 6. They also say the stock is cheap and the company is committed to capital return. Still, China now represents about 20% of Qualcomm's total revenue, and investors want to see more clarity about where its business in China is headed. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.